Question 8. How volatile is the SPGP ETF? How much price fluctuation can I expect? The Invesco SP 500 GARP ETF, SPGP, is likely to experience more volatility than the overall stock market, but less volatility than pure growth stock investments. Here's a breakdown of the factors influencing SPGP's volatility. Underlying assets. Large cap companies. SPGP invests in large cap U.S. companies. These companies tend to be more established and financially stable than smaller companies, which can contribute to lower volatility compared to small cap stocks. Growth stock focus. However, SPGP's focus on growth at a reasonable price through the SP 500 GARP index introduces an element of growth stock characteristics. Growth stocks, by their nature, are inherently more volatile than value stocks due to their dependence on future earnings potential. If these companies fail to deliver on their growth prospects, their stock prices can experience significant swings. Index construction. Diversification. The SP 500 GARP index provides some level of diversification across various sectors and industries within the U.S. market. This diversification helps mitigate some of the volatility associated with individual companies. Sector weighting. However, the index methodology might overweight certain sectors based on growth potential and valuation. If these sectors experience higher volatility, it could impact the overall volatility of SPGP. Market conditions. Overall market volatility. The broader market environment significantly influences SPGP's volatility. During periods of economic uncertainty, rising interest rates, or geopolitical tensions, the entire stock market, including SPGP, can experience increased volatility. Growth stock sensitivity. During market downturns, growth stocks tend to be more sensitive than value stocks. This can lead to larger price swings for SPGP compared to the broader market. Question 9. Is there a risk that I may not be able to easily buy or sell shares of the SPGP ETF when I want to? The risk of encountering difficulty buying or selling shares of the SPGP ETF, Invesco SP 500 GARP ETF, is generally low, but there are some circumstances to consider. Generally liquid ETF, SPGP is considered a liquid ETF due to several factors. Underlying holdings. It tracks the SP 500 GARP index, which comprises large-cap U.S. companies with high trading volumes. This makes it easier for the ETF to buy and sell these holdings to meet investor demand. ETF structure. Unlike mutual funds, ETFs trade throughout the day on stock exchanges like any other security, allowing for immediate buying and selling during trading hours. Market makers. Market makers play a crucial role by continuously quoting bid and ask prices for SPGP shares, ensuring a market exists for investors to transact. Trading volume. SPGP typically has a healthy average daily trading volume, indicating significant investor interest and facilitating easier buying and selling. Potential limitations to liquidity. While SPGP is generally liquid, there are some situations where buying or selling shares might be more challenging. Market volatility. During periods of extreme market volatility or overall low trading activity, liquidity for all assets, including ETFs, can decrease. This could lead to wider bid-ask spreads and potentially slower execution of trades. Order size. If you're looking to buy or sell a very large number of SPGP shares, it might take longer to find a counterparty, someone willing to take the other side of the trade, due to the sheer volume involved. In such cases, it may be beneficial to break down the order into smaller chunks or work with your broker to navigate the transaction efficiently. Tips for smooth buying and selling. Reputable broker. Choose a broker with a good track record and access to major exchanges where SPGP is listed. Limit orders. consider using limit orders to specify the maximum price you're willing to pay for shares or the minimum price you're willing to accept when selling. This can help you avoid unfavorable execution during periods of high volatility. Monitor trading volume. Keep an eye on SPGP's average daily trading volume to gauge liquidity before placing your order, especially if you're dealing with a large number of shares. Question 10. How diversified is the SPGP ETF's portfolio? The Invesco SP 500 GARP ETF, SPGP, offers diversification, but it's not perfect diversification. Here's a breakdown of the factors influencing SPGP's diversification level. Diversification aspects. Large cap exposure. SPGP invests in large cap U.S. companies, which inherently provides some level of diversification across various sectors and industries within the U.S. economy. Compared to smaller companies, large caps tend to be less volatile, further contributing to portfolio diversification. SP 500 Index underlying. By tracking the SP 500 GARP Index, SPGP gains exposure to roughly 75 companies. While not an exhaustive representation of the entire U.S. market, it still offers diversification across a significant portion of large-cap U.S. stocks. Potential limitations to diversification. Growth focus. The SP 500 GARP Index methodology prioritizes companies with growth potential, which might lead to a tilt towards certain sectors like technology or healthcare, where growth opportunities are often concentrated. This can result in less diversification compared to a broad market ETF that allocates across various sectors based on market capitalization. Index weighting. The SP 500 GARP Index doesn't weight companies equally. Companies with higher growth scores receive a larger weighting within the index. This can lead to concentration risk if a few high-growth companies dominate the ETF's portfolio. Overall assessment. SPGP offers some level of diversification due to its exposure to a basket of large-cap U.S. companies. However, its focus on growth at a reasonable price and the weighting methodology of the underlying index can introduce some sector concentration and limit diversification compared to a truly broad market ETF. Question 11. Does the SPGP ETF invest in value, growth, or a blend of both styles? The Invesco SP 500 GARP ETF, SPGP, aims to invest in a blend of growth and value styles. Here's why. SP 500 GARP Index. SPGP tracks the SP 500 GARP Index, which specifically targets companies with characteristics of both growth and value stocks within the SP 500. Growth stock identification. The index methodology considers factors like earnings and sales per share growth to identify companies with the potential for above-average future earnings. These are characteristics of growth stocks. Value stock identification. The index also uses factors like price-to-earnings, PE, ratio to identify companies that appear to be trading below their intrinsic value. These are characteristics of value stocks. SPGP's growth at a reasonable price philosophy. The growth at a reasonable price, GARP, philosophy behind the SP 500 GARP Index attempts to capture the upside potential of growth stocks while mitigating some of the risks associated with them. Here's how. Growth potential. The index prioritizes companies with the ability to generate above-average earnings in the future, aligning with growth stock characteristics. Financial health. The index also considers factors like profitability, debt levels, and cash flow to identify companies with strong financial fundamentals, a consideration more common in value investing. Reasonable valuation. The index doesn't simply pick pure growth stocks. It prioritizes companies that appear to be trading at a reasonable valuation compared to their earnings potential and future prospects. This valuation focus aligns more with value investing principles. Weighting by growth score. Not all companies within SPGP are created equal. The SP 500 GARP index assigns a growth score to each company based on their growth potential. Companies with higher growth scores will have a larger weighting, percentage ownership, within the ETF's portfolio. This prioritizes companies with a stronger chance of delivering the targeted growth, further emphasizing the growth at a reasonable price philosophy. Overall, SPGP offers a blend of growth and value styles by incorporating characteristics of both within its selection process and weighting methodology. This approach aims to achieve capital appreciation through the growth potential of the underlying companies, while potentially mitigating some of the risks associated with pure growth stocks by seeking companies with reasonable valuations and strong financials. Question 12. Are there other ETFs in the market that offer similar exposure to the same asset class or strategy? Yes. There are several ETFs in the market that offer similar exposure to the asset class and strategy of the Invesco SP 500 GARP ETF, SPGP. Here's a breakdown of some alternatives to consider. Similar underlying assets. Large cap US equity ETFs. These ETFs track broad market indices like the SP 500 or Russell 1000, providing exposure to a large basket of US companies, similar to SPGP's underlying holdings. However, they may not have the same focus on growth at a reasonable price. Examples include SPDR SP 500 ETF, SPY, iShares Russell 1000 ETF, IWF. Similar growth focus. Large cap growth ETFs. These ETFs specifically target large-cap companies with high growth potential. They may not incorporate a value tilt like SPGP, potentially leading to higher volatility. Some examples include Vanguard SP 500 Growth ETF, VOOG, iShares Russell 1000 Growth ETF, IWG. Alternative growth strategies. Momentum ETFs. These ETFs select stocks based on their recent price momentum, aiming to capture stocks experiencing strong upward trends. They can be more volatile than SPGP. Here's an example. iShares MSCI USA Momentum Factor ETF, MTUM. Question 13. Are there any actively managed mutual funds that invest in a similar space as the SPGP ETF? How do the fees and potential performance of these mutual funds compare to the ETF? Yes, there are actively managed mutual funds that invest in a similar space as the Invesco SP 500 GARP ETF, SPGP. These funds typically target large-cap U.S. companies with a blend of growth and value characteristics. Here's a breakdown of the comparison. Similar investment space. Growth at a reasonable price, GARP, strategy. Several actively managed mutual funds employ a GARP strategy similar to SPGP. They focus on identifying companies with growth potential, but at valuations that appear reasonable, aiming for a balance between growth and value investing. Key differences. Management style. Actively managed mutual funds have portfolio managers who actively research and select investments based on their judgment of the market and individual companies. SPGP, on the other hand, is passively managed and tracks a predefined index. Fees. Actively managed mutual funds. These funds typically have higher expense ratios compared to ETFs like SPGP. Expense ratios for actively managed funds can range from 1% to 2% or more, while SPGP has an expense ratio of 0.34%. The higher fees cover the salaries of portfolio managers and research teams. ETFs generally have lower expense ratios than actively managed funds due to their passive management structure. Potential performance. Actively managed mutual funds. The goal of active management is to outperform the market through security selection and market timing. However, there's no guarantee that actively managed funds will outperform their benchmarks, like the SP 500, after accounting for fees. SPGP tracks the SP 500 GARP index, aiming to replicate its performance before fees. Historically, a large percentage of actively managed funds underperform their benchmarks after fees. We explored the depths of the SPGP ETF, the Invesco SP 500 GARP ETF. We saw it offers a blend of growth and value, targeting large-cap U.S. companies with reasonable valuations. There are definitely some pros, like diversification and a lower expense ratio compared to actively managed funds. But remember, it's not perfect. The focus on growth can lead to some sector concentration, and there are other ETFs out there with similar goals and potentially lower fees. So, the big question, is the SPGP ETF right for you? Well, that depends on your risk tolerance, investment goals, and the rest of your portfolio. We recommend doing your own research, and maybe consider a consultation with a financial advisor to create a personalized plan. In the meantime, hit that like button if you enjoyed this deep dive, and let us know in the comments what other ETFs you'd like us to crack open next. Don't forget to subscribe to Chat ETF for more investment insights delivered in bite-sized videos. Thanks for joining us, and we'll see you on the next one.